Hello everyone. I welcome you all to the One Stop Investment YouTube channel. In this video, we will see how Indian income tax slabs have changed since independence, that is from 1947 to 2020, so that you will be aware of the different tax slabs which Indian taxpayers have come across over the past 7 decades. So, before going into this video, please do check the link in the description box to read more on the investment related post in onestopinvestment.com. To understand older tax rates, we have to know little bit about our coin systems. Post independence for 3 years, that is from 1947 to 1950 until the First Republic of India, we used George 6 series coins, and these are the available denominations. So, to understand taxation better, let's remember this. 1 rupee is equal to 16 annas. Let's see the income tax slab for the financial year 1947-48 and from 1948 to 49. There were 5 tax brackets. If someone had earned 5,000 rupees then, he had to pay 218.75 rupees as tax. For the simplicity of calculation, I am not going to take any deduction in any of the coming tax calculations. Let's move on to the next financial year 1949 to 1950. Late Finance Minister John Mackay has reduced tax on income up to rupees 10,000 by quarter of an anna. Maximum rate of income tax was reduced from 5 annas to 4 annas, but wealth tax came in. If someone had earned 5,000 rupees then, they had to pay 164 rupees as tax. This is 25% less than the previous tax slab. The same tax slab was continued for 6 years, that is up to 1955. For the financial year 1955 to 1956, marital status based tax slabs were introduced. A married person had to pay tax for income above 2000 rupees and an unmarried person had to pay tax for income above 1000 rupees. Rest of the tax slabs were same as the previous years. For a total income of 5000 rupees, a married person paid 140 rupees as tax and an unmarried person paid 187.5 rupees as tax. This continued up to 1958. For the financial year 1958 to 59, tax percentage system was introduced. It was due to decimal series monetary system. This tax slab varied as per the number of members in the family. Zero tax slab limit was also increased. For a total income of 5000 rupees, the income varied from 42 rupees to 120 rupees. The tax amount were considerably reduced in this period. This tax slab was continued for 5 years, that is up to 1963. For the financial year 1963 to 65, they had increased the tax percentage. Tax brackets were also increased to 9. For the next financial years 1965 to 68, for the first time, zero tax slab was removed and surcharge was introduced. Tax slabs were consolidated into one and tax amounts were also increased multifolds. If someone had earned 25,000 rupees as income, they had paid 4,800 rupees as tax, which is 35% greater than the previous tax slabs. For the financial years 1968 up to 1970, the surcharge tax was reduced and more tax slabs were introduced. For a total income of 25,000 rupees, a person had to pay 18% as tax, which is 4,400 rupees. For the next financial years 1970 to 71 and 1973 to 74, zero income tax slab was introduced, which was great relief to majority of the people. And 11 tax brackets were kept with tax rates from 10% up to 85%. This was the highest number of tax slabs in India. Even if we add surcharge, The highest tax slab attracted 93.5% tax. For a total income of 25,000 rupees, a person had to pay 3,300 rupees as tax, which was 25% lesser than the previous tax slabs. For the financial year 1974, few tax slabs were removed and again tax percentage were increased from the previous tax system. For a total income of 25,000 rupees, a person had to pay 4,100 rupees as tax, which is 25% greater than the previous tax slabs. For the next financial years 1976, zero tax slab were increased from 6,000 to 8,000 rupees and tax rates were also decreased. For a total income of 25,000 rupees, a person had to pay 3,520 rupees as tax, which is 14% lesser than the previous tax slabs. This continued for the next 6 years up to 1982. For the next financial year 1982 to 84, again the number of tax brackets were reduced and zero tax slab were increased to 15,000 rupees. For a total income of 25,000 rupees, a person had to pay 3,300 rupees as tax, which is 6% lesser than the previous tax slabs. For the financial year 1984 to 1985, the tax slabs were increased and the tax rates were brought down. For a total income of 25,000 rupees, a person had to pay 2,520 rupees as tax, which is 24% lesser than the previous tax slabs. For the next financial year 1985, the tax brackets were reduced to 5 and the same tax rates were followed for 5 years up to 1990. For a total income of 50,000 rupees, a person had to pay 9,250 rupees as tax with zero surcharge, which is 27% lesser than the previous tax slabs. For the next financial year 1990 up to 1992, zero tax slabs were increased from 18,000 rupees to 22,000 rupees. For a total income of 50,000 rupees, a person had to pay 7,600 rupees as tax, which is again 18% lesser than the previous tax slabs. From 1992, the zero tax slab was increased constantly for every financial year for 7 years and the tax bracket was reduced to 4. In 1998, the tax slab was kept at 50,000 rupees and 10% incremental tax brackets were followed for next 8 years. Until 2005, there were changes only in the surcharge and no changes in the income tax slabs. At 2005, gender-based and age-based tax slabs were introduced. Tax slabs were also revised to benefit the taxpayers. Let us consider the taxable income to be 2 lakhs rupees. For a male, he had to pay 28,000 rupees as tax, including the surcharge. Still, it is 18% lesser than the previous tax slabs. Similar tax structures were followed with increase in zero tax slab for the next 6 years. For the financial year 2011, Super Senior Citizen category was introduced. Up to 5 lakhs, no tax has to be paid. For the next financial year 2012, gender-based tax slab was removed and up to 2 lakhs, zero tax slab was kept for general public. For the next financial year 2013 to 14, tax rebate was given. In 2014, zero tax bracket limit was increased from 2 lakhs to 2.5 lakhs. For a total income of 7.5 lakhs, a person had to pay 77,250 rupees as tax, which is 6% lesser than the previous tax slabs. In 2015, surcharge was increased from 10% to 12% on 1 crore plus income for an individual. No change in the tax slabs in this year. In 2016, tax rebate was increased from 2000 to 5000 rupees for income up to 5 lakhs. Again, no change in the tax slabs in this year too. In 2017, second level of tax bracket was reduced from 10% to 5%. For a total income of 7.5 lakhs, a person had to pay 64,375 rupees as tax, which is 17% lesser than the previous tax slabs. In 2018, Indian government has introduced standard deduction of 40,000 rupees from taxable income, and additionally they implemented health cess of 1% on tax payable. For 7.5 lakhs, a person had to pay 56,680 rupees as tax, which is 12% lesser than the previous tax slabs. In 2019, the standard deduction was increased from 40,000 to 50,000 rupees. For a total income of 7.5 lakhs, a person had to pay 52,500 rupees as tax, which is 4% lesser than the previous tax slabs. For the current financial year, taxpayers were given choice either to continue the old tax regime or pay tax as per the new tax slabs with the given criteria. For the new tax regime, taxpayers should not claim any amount other than standard deduction. Let us have a comparison between the old and the new tax slabs. For a total income of 7.5 lakhs, if a person choose old tax slab, he has to pay 54,600 rupees as tax. If a person choose new tax slabs, he has to pay 33,800 rupees as tax. Thank you for watching this video. I hope you liked it. Don't forget to like, comment, share, subscribe and click the bell icon for the instant update from One Stop Investment channel. Happy investing! If you have any queries, please leave them in the comment or drop an email to the mail ID in the description. Thank you.